Hello everyone, I'm William Castro Alves, Chief Strategist at Avenue. I'm here in Nasdaq today to talk to Michael Normile, economist here in Nasdaq, about what happened in the market in 2024 and what can we expect in 2025 looking forward. So I'm really excited here to talk to you, Michael. It's a pleasure to be here, and thank you for having us here.
Yeah, of course. And thanks for being here. I'm happy to talk about the subject and interesting to hear what you have to say too.
Yeah. Well, it's usually to say that stock market is a risk place. Investors should take care when invest. But actually what we have seen in this year has been, I would say, a really good year so far. We didn't finish 2024. We are here in November, but we are almost done with the year. If you can point some highlights, what do you think was the main responsible for this, what we can call like a really good year, like in related to returns for investors? What do you think like helped the market to deliver this strong performance?
Yeah, I think there's been a few factors, and really the strongest performance, of course, has been with the large cap stocks. That's where we've seen record high after record high this year. And I'd say there's three different factors playing a role. Number one, of course, we've had a resilient economy. Number two, we've had strong earnings growth. And then number three, still some continued AI optimism that we saw was a trend last year, but it's continued into this year. So getting back to the resilient economy perspective, more or less all year, we've seen data coming in stronger than expected in the US. In Q1, that also included inflation. So that was a little bit of a troublesome period for the Fed, where it ended up pushing back their rate cuts to September. And coming into the year, people thought it would be as early as March. But after Q1, inflation started slowing down. Now it's pretty much back to the Fed's target with their headline PCE inflation at just 2%. Meanwhile, the labor market has cooled off and unemployment has risen a little bit, but it's sort of stabilized lately. So the labor market's in an okay spot. And then overall GDP growth, we're on pace for almost 3% growth this year. So doing a pretty solid pace of growth. We have a bit of a Goldilocks economy, you could say, where not too hot, not too cold. And then in terms of earnings growth, if you look at the large caps, forward earnings this year, Nasdaq 100, it's up 15%.
Wow.
S&P 500 is up 10%. And so that's a big reason why you see that their prices are up 25% this year. So a lot of it has been earnings related for them. And then the last piece, like I mentioned earlier, AI optimism was a big factor last year. This year, you've seen that broaden out beyond just the Mag 7 companies. We're now, second order kind of companies, energy producers, infrastructure companies. They've all started to get a little bit of a boost from AI optimism as well.
Yeah, that's a really good point and really way of sum up, because it was three different vectors, we could say, that helps the market. And in Brazil, sometimes we see the US market as an expensive. I've heard a lot of investors in Brazil saying, oh no, US stock market is too expensive because it trades like a 22, 35 or 26 price earnings. But actually, that's an important thing. Like, companies here are growing. The economy is growing. And also you have the AI boom, which some companies and some analysts, they say that it's just the beginning of something that could be like a disruptive as the internet. So these all together combined help to explain this strong performance. So it's a good point. And also everybody expected when back in 2023, I remember reading researches and everything else, like everybody were talking about slowing down the economy, the possibility of a hard landing and even a recession. And then we ended up having like quite a good year in economy. Is there anything that you could say like was responsible for that? Why the market has been so wrong in some predictions, which is normal. Like we as economists, we made a lot of mistakes in our predictions, but if you could highlight any specific point, like that perhaps the market was too focused on this and this happened, I don't know.
Right, and there's that famous Samuelson quip that the stock market has predicted 9 of the last 5 recessions.
Yeah.
So, naturally, economists will make their mistakes too. But I think in the US, it really comes down to two things. The consumer has been much stronger than expected. And then also we've had fiscal expansion that's really helped. So things like the CHIPS Act and the Inflation Reduction Act have led to a lot of increase in business investment. So a lot of the growth that we've seen in the last couple of years has come from government spending and consumer spending. With the consumer, they've had a lot of time to save money early on in the pandemic with their stimulus checks and enhanced child tax credits, things like that. So people had what called excess savings, so savings above and beyond what would have happened had the pandemic not happened. And then at the same time, as inflation has come down and the labor market has held up, we've had positive real wage gains for people. So that's helped them keep spending too. So it's been multiple factors, again, keeping the economy humming along here, but a big reason why we avoided that soft landing, and that's set up the market to have these strong gains the last couple of years.
Yeah, that's a good result. Well, moving forward, we are almost done with 2024, ready to 2025. Of course, as usual in the market, a lot of expectations, a lot of uncertainty. There is a change in politics. There is a new government that's going to come. A lot has been said about that, has been priced already in the market. As usual, the market is, I made this joke that the market is kind of like a bipolar. One day you see just one thing, and then another day forget about and change completely opinion as we change clothes. But how do you see 2025 for the economy and, of course, the impact and the earnings and the stock market?
Yeah, I think the economy has a lot of momentum going into 2025, so I don't see any reason where that's necessarily going to change, at least in the near term right now. We have the Fed removing some headwinds with taking rates a little bit down. We've already got 75 basis points in rate cuts this year. There's a good chance we'll get another one in December. There's a little debate about that right now. It's looking, 60-40 right now, but we'll see what happens with the data over the next month or so, and then continued rate cuts at some point over into next year. So all those things should help the economy. And like I said earlier, we're in a relatively good spot with the overall economy here. So I think the macro piece will be supportive. The other thing that you brought up earlier is people in Brazil thinking that the US market is expensive. And I think you do see that with analyst projections for next year, where people are looking for faster earnings growth than price growth. So analysts are still projecting positive price growth next year, I think around 7% for the Nasdaq 100, but they're looking for faster earnings growth to help get those valuations down a little bit. So I think that'll be interesting to see where, it's hard to repeat another year like this.
Exactly.
But
we wish.
Right, exactly. Yeah.
Also, you guys as technology exchange, or has been known as that. Of course, there's a huge spectrum nowadays of Nasdaq. It's not just technology companies. But how do you see the role and the market concentration and some single names, like I would say 10 stocks nowadays, and on the indexes, the big seven, the magnificent seven that people call. How do you see this moving forward? You said about the earnings growth. I've read that the market expect a kind of normalization where the other companies also start to growing, and the big seven is still growing, but like in a slower pace. How do you see this market concentration as a risk, and also the role of the big seven moving forward 2025?
Yeah, I think, with the Magnificent Seven stocks, and of course, they're all NASDAQ listed companies, a lot of their growth this year, they're up about 45% in terms of price. And I was talking earlier about earnings growth, and their forward earnings are up 30% this year. So for them, it really has been earnings driven. It's not, pure speculation or anything like that. It's really been driven by fundamentals. And I suspect that will continue, but I think, like you're saying, right, it's hard to keep that pace of earnings growth up forever. And, as an economist, right, there's just base effects where you can't just grow 30% forever.
Yeah, exactly.
So there needs to be some normalization there. And I think it is healthy that we see other companies catch up. So 2023 was a case where there was a lot of concentrated earnings growth, and we've seen that start to broaden out this year. And I think we'll see that even further in 2025, especially with smaller companies that will benefit more from rate cuts because they have more floating rate debt and things like that. So that will help relieve some margin pressure that they've been dealing with over the last couple of years as the Fed has hiked rates.
No, that's a really interesting, good point. Also, we spoke about AI quite briefly, but I think like there's a lot of curiosity, especially in Brazil. Like as a Brazilian, when we bring some Brazilian investors here and financial advisors, and they arrive here and they say like, "Oh, that's the future is already happening here." And of course, like Brazil is an emerging economy, is still growing, is still having a huge space to catch up and with something close to US. But also at the same time, a lot has been said and a lot has been invested in AI. And even here in US, of course, we have seen a lot of changes all over the year, but I think there is still a lot of room for AI, and we don't see them still that much in our daily basis. So I would just start, like I'm being quite broad here, but like looking for 2025, what do you think like about AI specifically? Are we gonna start to see some like more practical uses for AI in our daily basis? And also, how do you see the subject going broad, not just with Big Seven in the market?
Yeah, I do think we have seen that broadening start to happen, and I think we could see that continue. You read about small modular reactors for nuclear power as a way to power the energy needs for AI and things like that. So emerging technologies like that could be something to watch. But in terms of AI, obviously we're still in kind of the infancy phase, right? This is going to be a long-term thing that will develop. But there was actually a survey from the St. Louis Fed recently that showed that people use AI more outside of work than at work at this point. And I think that makes sense though, right? Because from a company perspective, you need to be cautious about rolling it out. You need to train your staff on how to use it. You need to put in guardrails for data privacy and things like that. So it's still something that companies are working on, training up staff on how to use. But you do see some areas where adoption has been pretty high. It's really, I'd say what you see is adoption is based more on role than sector. So marketing roles, customer service roles, coding positions. So that's where the adoption seems to be highest so far. And beyond that, we'll see, where it goes from here.
Yeah, because what caused some kind of like fear in some investors in Brazil, especially because it's quite far from us, from their reality. It's like the idea of AI is a kind of new hype or buzz. You brought something. You just said like we are in infancy. We're just like at beginning. So in your thoughts, AI is not something like we saw before, like with metaverse and then other technology. So it's something more consistent. You would say that, or it's right to say that, or no?
I mean, I'm not an expert on the metaverse, so I can't speak about that. But I do think AI, of course, when it rolled out, right, it was really impressive. It was something that people hadn't seen that kind of technology before, and we're still figuring out how to make the best use of it at this point. And then, of course, all the companies that are producing it are still improving it, iteratively. So I think we still need to see those improvements coming through. But I'm optimistic that maybe it's not 1 or 2 years from now that we see the big AI, the productivity jump that people are hoping for, but maybe 5 years, maybe 10 years, that I think people, in the term you used was hype, I believe, right? So I think it's hype in the perspective of it's going to be a total game changer right now, but maybe not in the sense that in 5 or 10 years that things are going to look a lot different. So I think it's just the time frame that you're looking at that really determines whether it's hype or not.
That's good. And also, you mentioned like you see this term and this idea being broadening among other companies. So if you can just give a little bit more of color on that. Like I read some statistic, like I don't know how much of the percentage of companies mention AI. So companies are investing or are studying or they create departments on AI. What you guys have seen here on Nasdaq among the companies that trade here, is that true, or if you can just give a little bit more of color on that?
Yeah, I think I've seen similar data to what you have, where a lot more mentions on earnings calls and people want to be aware that their company is pursuing it, right? You can't miss out on it necessarily. The flip side being, though, is that investors are wary of the expense required to integrate AI to produce AI. So it's a give and take, right, where you want to show that you're adopting the technology or open to the technology, but not over-investing in it to a detrimental perspective, because investors are definitely concerned about the cost of it. I think that's one change that we've seen this year from last year, where there's been more consciousness about the cost of AI and producing in it and investing in it and things like that.
Yeah, that's true. A lot has been said about those companies. They are throwing a lot of money on this, but we haven't seen any results. Like some investors, like they are talking more about this, which we haven't seen before. That's true. That's a good point. One thing that is always came attention in Brazil is the dollar, because the first step when you invest abroad is like you have to send your money from Brazil to here, so you need to buy dollars. And especially against real, our currency, the dollar went up. So if I would just ask you, what are your thoughts on dollar? Because the strength of dollar, I don't know if it's okay for you.
I think a lot of the challenge that you've seen around the strength of the dollar has just been that it's the higher for longer situation that we've seen with rates, because coming into this year, for example, markets were pricing 6 or 7 rate cuts from the Fed. They thought it was going to start in March. And then fast forward to September of this year, that's when we get our first rate cut, and you've had other central banks around the world cutting. Of course, same for Brazil, right? A lot of the emerging economy central banks, they were the first ones to hike rates, and they were the first one to cut rates, and they really managed this inflation cycle that we've seen around the world quite well. But that also, with the Fed keeping rates higher for longer, led to a bigger interest rate differential where that's going to keep the dollar stronger. So I think that's been a surprise headwind for a lot of people, where expectations were that we were going to get more cuts and sooner than we got them.
Michael, just to finish, do you have any other thoughts or any considerations for Brazilian investors?
I think we're on pace for another good year for markets. Like we talked about, there's macro support there. There's expectations of continued earnings growth. So I think some of the headwinds that you talked about in terms of valuations are going to be improving in the next year, and the macro support is there. So I'm optimistic about a broadening in terms of what we see with the markets next year.
Yeah, great. So thank you for having us in the name of Avenue and the Brazilian investors. I'm saying it's a pleasure and an honor to be here talking to you guys in Nasdaq and bringing US market to Brazilian investors. Thanks for joining us, and see you next time.